Based on the historical data and forecast, Bitcoin shows a fluctuating trend with a recent consolidation around the 83,000 to 85,000 range. The RSI consistently stays between 33.9 and 53.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are widening, suggesting increased volatility. The forecast for the next week shows a slight downward pressure initially, followed by a potential recovery. Considering the support level at 83600 and the recent price action, I recommend a moderately bullish strategy. We will implement a strategy based on the Bollinger Bands and RSI. The strategy will involve a long position when the price touches the lower Bollinger Band and the RSI is below 40. Specifically, enter a long position at 83,200 plus 1,000, setting a stop loss at 82,700 plus 1,000, and a target price at 85,000 plus 1,000. This strategy aims to capitalize on potential bounces from the lower Bollinger Band while limiting losses with a conservative stop loss. If the price reaches the target, we will take profits and reevaluate the market conditions. The RSI condition ensures that we only enter when the asset is relatively undervalued, increasing the probability of a successful trade. Based on the historical data and forecast, Ethereum shows a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast for the next week projects further price declines, reinforcing this trend. The support price is consistently at $1,570, and the resistance is at $1,620. Considering the RSI readings, we'll implement a short selling strategy. We will enter a short position at $1,520. The stop loss will be set at $1,500, just below the forecast price and below the lower Bollinger Band, to protect against potential upward fluctuations. The initial target price will be $1,500, aligning with the forecast and a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band around $1,500, it suggests strong selling pressure and confirms our short position. If the price reaches the target of $1,500, we will take profit. However, if the price breaks through the $1,500 level and hits the stop loss of $1,500, we will exit the position. This combined strategy, utilizing both RSI and Bollinger Bands, aims to capitalize on the predicted downtrend while mitigating risk through strategic stop-loss placement and profit-taking at key technical levels. The portfolio will prioritize this short-selling strategy due to the consistent bearish signals. Based on the historical data and forecast, XRP shows a slight upward trend with fluctuating volatility. The support price consistently remains around $1.93, while the resistance fluctuates between $2.09 and $2.13. The RSI values indicate that XRP has been mostly within the neutral zone, with occasional dips into oversold territory. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands to maximize potential returns. My strategy involves a tiered approach. First, when the RSI falls below 35, indicating an oversold condition, enter a long position at $2.01. Set a stop loss at $1.93, just below the established support level. The initial target price is $2.13, corresponding to the resistance level. If the price reaches this target, and the RSI is below 80, consider a second target of $2.16. Conversely, if the price touches the lower Bollinger Band, which has been around $1.8, enter a long position at $1.8, with a stop loss at $1.77 and a target price at $2.08. This blended strategy aims to capitalize on both oversold bounces and Bollinger Band breakouts, optimizing for high returns while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend, consolidating within the $579 to $611 range. The RSI consistently remains below 50, indicating a generally neutral to slightly bearish momentum. The Bollinger Bands have been widening recently, suggesting increased volatility. Given the forecast for April 19, 2025, at $593, I recommend a long position entry at $581, coinciding with the forecast price and a lower Bollinger Band. A stop loss should be placed just below the support level at $577 to protect against a potential downside breakout. The initial target price is set at $597, aligning with the recent resistance level and the upper Bollinger Band. To refine the strategy, I'll incorporate RSI signals. If the RSI dips below 20, oversold, consider entering a long position at the prevailing price, setting a stop loss at $577 and a target price at $597. Conversely, if the RSI exceeds 80, overbought, consider a short position at the prevailing price, with a stop loss at $597 and a target price at $581. Combining these signals with the Bollinger Bands, the final portfolio will prioritize long positions when the price touches the lower Bollinger Band and the RSI is oversold, aiming for a profit of $16 per trade with a maximum risk of $6. Based on the historical data and forecast, Solana exhibits a generally upward trend, supported by the recent price action and the projected increase over the next week. The RSI consistently fluctuates, with values largely above 30, indicating a lack of strong oversold conditions. The Bollinger Bands show periods of volatility but also suggest potential breakout opportunities. Considering these factors, I recommend a long position strategy. We will enter a long position at $130, placing a stop loss at $126, just below the established support level. The initial target price will be $137, aligning with the forecast for April 25, 2025. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI drops below 30, indicating an oversold condition, we will hold the position and wait for a bounce. Conversely, if the price touches the upper Bollinger Band, suggesting overbought conditions, we will consider taking partial profits at $134 and tightening the stop loss to $131. This dynamic approach, combining trend analysis, RSI signals, and Bollinger Band volatility, aims to maximize returns while minimizing risk, and the final target price will be $137. Based on the historical data and forecast, Dogecoin demonstrates a sideways trend with fluctuating price movements. The RSI values hover between 32.8 and 48.8, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting varying volatility. Considering the support price of $0.153 and resistance of $0.167, a range-bound trading strategy is recommended. We will implement a combined strategy using RSI and Bollinger Bands. The entry price will be $0.154 when the RSI falls below 35 and the price touches the lower Bollinger Band. The stop loss price will be set at $0.152 to limit potential losses, and the target price will be $0.16, aiming to capture a moderate profit within the established range. To maximize potential returns, we will employ a dynamic position strategy. When the RSI exceeds 65 and the price touches the upper Bollinger Band, we will initiate a short position with an entry price of $0.16. The stop loss will be placed at $0.162, and the target price will be $0.156. This strategy capitalizes on the potential for price corrections within the range. Combining both long and short positions, we aim to generate consistent profits by exploiting the sideways trend of Dogecoin. The portfolio will be 50% long and 50% short to mitigate risk. Based on the historical data and forecast, TRON exhibits a slight upward trend, fluctuating within a range bounded by a support price of $0.239 and a resistance price of $0.246. The RSI indicates that TRON is currently within a neutral range, hovering around 50 to 60, suggesting neither overbought nor oversold conditions. The Bollinger Bands show that the price is approaching the middle band, with occasional touches of the upper band. Considering these factors, I propose a moderately bullish strategy focused on capitalizing on potential upward movements while mitigating downside risk. My recommended strategy involves entering a long position at $0.24, coinciding with a recent price point and aligning with the middle Bollinger Band. To manage risk, I suggest setting a stop loss at $0.237, just below the forecast price for April 25, 2025, and slightly below the recent low. For the target price, I aim for $0.255, representing the recent high and the upper Bollinger Band. This strategy combines trend analysis, RSI assessment, and Bollinger Band proximity to define clear entry, stop loss, and target levels, aiming for a balance between potential profit and risk management. Based on the historical data and forecast, Cardano demonstrates a sideways trend with fluctuations around the $0.61 to $0.637 range. The RSI consistently remains between 33.4 and 49.1, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, suggesting moderate volatility. Considering the forecast for the next week, the price is expected to hover around $0.603 to $0.615. I recommend a long position with an entry price of $0.606. A stop loss should be placed just below the lower Bollinger Band at $0.566 to mitigate potential losses if the price breaks down. The target price for this trade will be $0.637, aligning with the resistance level. This strategy combines technical indicators and price action to maximize potential returns while managing risk. The RSI suggests a cautious approach, avoiding aggressive overbought trades. The Bollinger Bands provide dynamic support and resistance levels. The combination of these factors leads to a conservative but potentially profitable long position. This strategy aims for a moderate gain within the established range, capitalizing on the sideways trend while protecting against significant downside risk. Based on the historical data and forecast, Chainlink shows a slight upward trend with periods of consolidation. The RSI fluctuates between 30 and 46, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. The forecast prices for the next week are relatively stable, hovering around $12.2. Considering the support at $12.2 and the recent consolidation, a conservative strategy focusing on short-term gains is advisable. Therefore, I recommend a strategy based on the RSI and Bollinger Bands. We will enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $12.1. Place a stop-loss order at $12.2, just above the support level to limit potential losses. Set a target price at $12.6, aligning with the resistance level. This strategy aims to capitalize on short-term bounces and avoids excessive risk. Given the forecast stability, this is a reasonable and potentially profitable approach. Based on the historical data and forecast, Avalanche shows a slight upward trend, bouncing between the support of $18.7 and the resistance of $20.1. The RSI fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been approaching the upper band recently, suggesting a potential for a pullback. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. We will implement a buy strategy when the RSI falls below 35 and the price touches the lower Bollinger Band, indicating an oversold condition. Specifically, on April 18, 2025, the RSI was 49.6 and the lower Bollinger Band was 16.2. We will wait for a pullback to initiate the trade. If the price drops to $16.2 and the RSI falls below 35, enter a long position at $16.2. Set a stop-loss order at $15.5 to limit potential losses. The initial target price will be $19.5, aligning with the recent resistance level. If the price continues to rise, consider adjusting the target price to $20.5, the previous resistance level. This strategy aims to capitalize on the upward trend while mitigating risk with a well-defined stop-loss and target price. Based on the historical data and forecast, Chiliz has been fluctuating within a range, with support at $0.0354 and resistance at $0.0418. The RSI has been oscillating around 40, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands show a narrowing range recently, suggesting a period of consolidation before a potential breakout. The forecast for the next week indicates a slight downward trend, with prices hovering around $0.036. Given this analysis, I recommend a cautious strategy focusing on short-term opportunities. My investment strategy will involve a combination of RSI and Bollinger Band signals. First, when the price touches the lower band of Bollinger Bands and the RSI falls below 30, consider a long position with an entry price of $0.0354. Place a stop-loss order at $0.0341 to limit potential losses. Set a target price at $0.039, aiming for a moderate profit. If the RSI reaches 80 while the price is near the upper Bollinger Band, consider a short position with an entry price of $0.039. Place a stop-loss order at $0.0399 and set a target price at $0.0354. This blended strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, FLOKI shows a sideways trend with fluctuating RSI and Bollinger Bands. The RSI values have been oscillating between 30 and 50, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast prices are slightly decreasing, which hints at a potential minor downward correction. Given this, I propose a cautious trading strategy focusing on short-term opportunities. My strategy involves a combination of RSI and Bollinger Band signals. I will enter a short position at $0.0000550 when the price touches the upper Bollinger Band and the RSI exceeds 70, indicating an overbought condition. The stop loss will be set at $0.0000555, just above the entry price, to limit potential losses. The target price will be $0.0000525, near the support level and the lower Bollinger Band. If the price fails to reach the target and the RSI falls below 30, I will close the position to avoid further losses. This strategy aims to capitalize on minor downward corrections while managing risk effectively. Based on the historical data and forecast, Shiba Inu shows a sideways trend with slight upward momentum. The price has been fluctuating between a support level of $0.0000117 and a resistance level of $0.0000124. The RSI has been hovering around the mid-range, indicating a neutral market sentiment. The Bollinger Bands show that the price is currently near the middle band, suggesting low volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the RSI dips below 30, indicating an oversold condition. The entry price will be $0.0000118. To manage risk, the stop loss will be set just below the support level at $0.0000117. The target price will be set at the resistance level of $0.0000124, aiming for a potential gain of $606. To further refine the strategy, we can incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, it signals a strong bullish trend, and we can consider adjusting the target price upwards. Conversely, if the price falls below the lower Bollinger Band, it suggests a potential downward correction, and we may need to tighten the stop loss. The forecast data for the next week indicates a price range between $0.0000118 and $0.0000122, reinforcing the sideways trend. Therefore, a conservative approach with a focus on short-term gains is advisable. This strategy combines RSI and Bollinger Bands to capitalize on short-term price movements while managing risk effectively. Based on the historical data and forecast, the Sandbox demonstrates a sideways trend with fluctuations around the support and resistance levels. The RSI indicates that the asset is currently in a neutral range, occasionally dipping into oversold territory but not consistently. The Bollinger Bands show that the price has been oscillating within the bands, suggesting volatility within the established range. Given these observations, I propose a short-term, range-bound trading strategy focusing on capitalizing on minor price swings. We will enter a long position when the price touches the support level of $0.244, setting a stop loss at $0.238 to mitigate potential losses if the price breaks down. The target price for this long position will be $0.265, aiming to capture a reasonable profit within the current range. To further refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 30 near the support level, confirming an oversold condition, it strengthens the case for a long entry at $0.244. Conversely, if the price touches the bottom Bollinger Band near $0.231, it also signals a potential buying opportunity at $0.244. The target price of $0.265 remains consistent, but we will adjust the stop loss to $0.24 if the price moves favorably. This combined approach leverages multiple indicators to increase the probability of success within the established range. Based on the historical data and forecast, ApeCoin shows a slight upward trend, but with considerable volatility. The RSI consistently remains below 50, indicating a generally oversold condition, with dips below 30, suggesting potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, reinforcing the oversold signal. Considering the support price of $0.409, we will implement a long position strategy when the RSI reaches an oversold level of 20. The entry price will be $0.38, with a stop loss set at $0.37 to protect against a potential downward reversal. The target price will be $0.47, near the resistance level, aiming for a significant profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price bounces off the lower band and the RSI is below 30, we will enter a long position. For the next week, the forecast price suggests a sideways trend around $0.408 to $0.416. Therefore, we will adjust our target price to $0.43, slightly above the recent high, and maintain the stop loss at $0.37. This combined RSI and Bollinger Band strategy provides a balanced approach, capitalizing on oversold conditions while mitigating risk with a well-defined stop loss and a realistic target price. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Conflux shows a downtrend with increased volatility. The RSI consistently hovers below 50, indicating a bearish momentum. The forecast for the next week projects further decline, with prices ranging from $0.0674 to $0.0616. Considering the support price of $0.0645, we will implement a strategy combining RSI and Bollinger Bands to capitalize on this downward trend. The primary strategy will be a short position when the RSI reaches below 30, combined with a stop-loss order above the upper Bollinger Band and a target price near the support level. Specifically, we will initiate a short position at $0.0674. The stop-loss will be set at $0.0700, just below the upper Bollinger Band, to protect against potential upward spikes. Our target price will be $0.0620, slightly below the support price of $0.0645, allowing for some buffer. This strategy combines the RSI's oversold signal with the Bollinger Band's volatility indication, aiming for a high probability trade with defined risk and reward. The portfolio will prioritize this short strategy due to the consistent bearish signals and the projected downward movement in the forecast data. Based on the historical data and forecast, Dogwifhat shows a mixed trend with periods of volatility. The RSI indicates that the asset is currently in an oversold condition, with values fluctuating between 28.2 and 46.3. The Bollinger Bands suggest that the price has been trading within a range, with recent movements towards the lower band. Considering the support price of $0.319 and the forecast prices hovering around $0.352 to $0.388, a cautious but potentially profitable strategy could be implemented. I recommend a long position with an entry price of $0.352, a stop loss at $0.319, near the support level, and a target price of $0.401. This strategy leverages the oversold RSI and aims to capture a rebound towards the recent high of $0.401. To refine this strategy, we can incorporate the Bollinger Bands. If the price breaks below the lower Bollinger Band, around $0.316, it could signal further downside, and the stop loss should be adjusted accordingly. Conversely, if the price approaches the upper Bollinger Band, around $0.467, it might indicate an overbought condition, prompting a partial profit-taking or a shift to a short position. The final portfolio will be a combination of the RSI strategy and the Bollinger Band strategy. The RSI strategy will be the primary driver, while the Bollinger Bands will be used for risk management and potential adjustments to the target price or position size. This blended approach aims to maximize returns while mitigating potential losses. Based on the historical data and forecast, Arweave shows a downtrend with a recent bounce. The RSI consistently hovers below 40, indicating an oversold condition and potential for a rebound. The Bollinger Bands show that the price is approaching the lower band, suggesting a possible buying opportunity. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. Our strategy involves a tiered approach. First, we will initiate a long position at $4.86 when the price touches the lower Bollinger Band and RSI is below 35. We will set a stop loss at $4.92, just above the support level, to limit potential losses. The initial target price is $5.29, aligning with the recent high. If the price reaches $5.29, we will move the stop loss to the break-even point. If the price continues to rise, we will set a second target price at $5.67, based on the previous high. This combined strategy aims to capitalize on the potential rebound while mitigating risk with well-defined stop loss and target levels. Based on the historical data and forecast, Wormhole exhibits a downtrend with significant volatility. The price has been fluctuating within a range bounded by a support of $0.0699 and a resistance of $0.082. The RSI consistently remains below 50, indicating prevailing bearish sentiment, with values dipping as low as 33.4, signaling potential oversold conditions. The Bollinger Bands show the price frequently touching the lower band, reinforcing the downward pressure. The forecast for the next week predicts a continued decline, with prices expected to reach as low as $0.0615. Therefore, a contrarian strategy focusing on short-term bounces near support levels combined with a robust risk management plan is recommended. My recommended strategy involves a series of short trades capitalizing on the expected continued downtrend. Entry price will be $0.071 when the price touches the bottom of the Bollinger Bands and RSI is below 40. The stop loss will be set at $0.073, just above the resistance level, to protect against unexpected upward movements. The target price will be $0.0681, aligning with the first day's forecast price. If the price reaches the target, we will reevaluate the market conditions and consider another short position near the support level of $0.0699, with a revised stop loss and target based on the updated forecast. This approach balances potential profit with calculated risk, aiming for high returns in a volatile market. Based on the historical data and forecast, Bittensor has shown a recent upward trend, breaking through the resistance level of $275 on April 18, 2025. The RSI consistently remained below 80, indicating that the asset is not overbought. The Bollinger Bands have been expanding, suggesting increased volatility and potential for price movement. Considering the forecast for the next week, with prices predicted to reach $275, a long position is warranted. I recommend entering a long position at $251, with a stop loss set at $245 to mitigate potential downside risk. The initial target price should be $264, aiming to capitalize on the short-term upward momentum. To refine the strategy, I suggest incorporating the RSI and Bollinger Bands. When the RSI dips below 30, consider entering a long position. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. The target price should be set at the upper Bollinger Band or $275, whichever comes first. If the RSI reaches 80, it's a signal to take profit or move the stop loss to break even. Combining these indicators will create a robust strategy with clear entry, stop loss, and target prices, maximizing the potential for high returns while managing risk effectively. The final portfolio will be a combination of the three strategies, with the forecast as the primary driver, supplemented by RSI and Bollinger Bands for fine-tuning.